Alright, what's up everybody? I'm just gonna jump right into it. Let's head on over to the charts. It's been a crazy day. Anyways, if you've watched my videos, you know that this is Ted from Bodies and Wicks. It's a little, I just name it Bodies and Wicks. I could call it whatever. Late Night with Ted, I could call it. Rendezvous with Miss Laureen. But I call it, Bodies and Wicks just because it makes more sense with trading because candles are bodies and wicks. But what we've got today, what we got going on right now is quite a lot. We just started the new week as of 7 p.m. My time, Central Time. And I've been basically doing a Twitter thread going at minute by minute, should kind of outlining, at least trying to reach a little bit maybe of a larger different audience of how we smart money reads price versus how a retail would read price, and so that's basically what I've been doing and trying to show, hey, this is the algorithm, and I'm trying to prove it to you that there's an algorithm in here. Um, and especially my most recent one is like, okay, if we click on the first picture, this is exactly what retail would have done, right? Retail would have done this. They would have saw this going down and then thought it was either going down and either would have waited and for this exact same thing to happen, right? And then bought, as soon as it touches the trend line, even though it's not really a really pretty trend line. I literally just went from this to this wick to this wick. That's all I did. Other people would have drew it different ways. Maybe saw it at a different light. I'm not for sure. That's the thing with trend lines. Nobody's ever the same. And that's why I don't trust them. And I said once it comes back and it touches, an imaginary line, it's gonna draw people into buying, right? And then after it draws people into buying, it's gonna drop. And I said that. Where did I say that? Um, There we go. Price should square to equal lows. Correct. This should end at the top of the bush block. It's doing this trick retail traders into buying. It will turn around and seek equal lows as liquidity. There you go. This is exactly what I said whenever it started going up. Whenever it started going up, this is exactly what I said. I said it's doing this to trick people into thinking it's going up. And then I think after that, somewhere it may be in this thread where I drew. I don't know. There was another. I'm not for sure. I've drawn so much up to show what. There was one I know where I just was like, hey, this is what retail says. I'm not for sure where I can find it because I got lost at one point and I wasn't following my own uh, thread, and I kind of got off into one separate thread. Oh, here we go. Oh no, yeah, that's the one I just showed. That's it. Oh no, yeah, this is it. This is when whenever price was coming down. So there's got to be within this one. Here we go. It's got to be in this one. No, I can't find it. Oh, yeah, maybe this is it. So this is how retail views it, and this is what retail theory can, this is why retail theory cannot be followed. Price won't just bounce off a diagonal line. But actually, it did. It did just bounce off a diagonal line. So this was first. I don't know how this got pushed to the end. This is really odd. But this got pushed to the end, and this got placed second after it didn't bounce off of it. It pushed down through it, but it came back up and it made a large spike. And so I was watching it, and I was saying it's gonna get past these lower levels down here, right? I was saying, it got caught in a bullish order block. It could possibly go up, but it's gonna struggle. And then next thing I know, as I was watching it, it I'll go. Well, let's see here. Where's the part where I say like, there it is. Ha, didn't expect that, but this is what happened. So it's a little bit out of chronological order for some reason. I don't know how it did that, but whatever. Um, as you can see, as I was watching it, you know, the bullish price is happening. This thing literally shot down so fast, and I was like, whoa! I was like, there's sell side liquidity here. There's equal lows here. I was like, it's on its path down. I was like, I know it's going down. I'm not stupid. This is smart money. This is what it does. It seeks out liquidity. It just went down and took out all of this. And as soon as it did that, I was like, oh, I was like, well, I was like, what? Either what it did is it triggered the buy limits and took out their short stop losses, or anybody that was already in a long trade that was had a short stop loss that was right behind them, got taken out, or um, or of course anybody that had some kind of sell stop at the end of this, was expecting to go down further and had a short stop loss, also got taken back up, and got taken out as well. So this thing just wiped out a tunnel. I can just feel the millions of dollars that probably got raped right through here. Um, and like I said, as soon as I saw that whiplash, I mean, it just happened in a flash, because it was just sitting here, it was just kind of going up, and it was kind of moving down, going up, and then all of a sudden it just went, boom, went down, and then went up, and I was like, well, I was like, okay, I was like, there goes. It's gonna turn around for a minute, but it's gonna also go back down, and I've stuck with my theory since. And that being said, let's head over to it and let's see what's going on with it. I mean, if we really want to go, no, don't want to look at the day. Come on now, let's look at the hour. So, believe it or not, I actually drew these lines on my phone, these green lines on my phone last night. Um, Not that they're exactly to the T, but it's the idea, right? It got higher than I thought it would. To be honest, I didn't think it would close in the fair value gap last night. I thought it would get close, but I thought that would come at a later time. But last night it closed in the monthly fair value gap, came back down, and we have what this is here. This is the weekly fair value gap. And then so now it is coming back down through here. What I have is we have this short-term kind of wave, right? This part here. Oops, I moved it. I need to lock that. It's thundering outside. Interesting. All right. So we kind of have this short-term wave area kind of here. I know there's a lot going on in here because I get down into 5-minute charts and I start marking down everything. But the point is that it was going to go up, kind of. I mean, this thing was on a roll, right? We all know that this thing has, ever since it got to the bottom, it just kind of took off and went sideways a little bit right here, but then after that, boom, it took off again. And so now my thing is that that's twice now. It left an imbalance way back here. This one is okay because as it was coming down, I mean, I'm not 100% sure about this one. Um, this one may also be okay just because of everything that was happening before it. So we may be okay with this imbalance. It may not come all the way back down here, but we do have equal lows here, right? Um, right now, I'm primarily paying attention to just this weekly fair value gap area right now. Um, and this weekly fair value gap area does have my Fibonacci that I Fibonacci anything that can pretty much um, not pretty much can be Fibonacci, but would have a meaning to be, Fibonacci basically. Um, so after and it, the way I do Fibonacci things, the way I've been taught to put a Fibonacci on things is that once that does not need to move. Once a high, so, something like a swing high like this has been broken, such as this large candle right here, right, and not just like broken as in like wicks through it and then comes back down. I mean, actually closes above it and stays above it. Once it has been broken, right, then you have a new trading area, basically. So what you want to do is you want to place your bottom fib on the the last low before it created the high that broke the previous high, if that makes any sense. So I'm placing it here. Some people would place it here. I wouldn't. Actually, most people wouldn't even do what I'm doing. A lot of people would probably put a Fibonacci here and then put it way up here and or put it right here and then put the top right here. Um, Instead, I'm not looking at any of that. Like I said, I looked at the last place to where it made its low before it took off and broke the high and closed above the high, and then waiting for the high above that. Now, before that, this was the high. Whenever I started drawing this, whenever I started drawing everything out. Now, I almost I still think that is kind of the high, and I don't know. I'll have to redo it just because the 150% um, extension pretty much lines up with the next weekly fair value gap. Now, pull, if I unlock this and I pull this to the next high, um, and the 127, kind of lines up with that, I think I'll be okay with that. Okay, it's close enough. I'm okay with that. So I'm looking for confluences, always looking for confluences. Okay, so I'm on the hour chart, so wicks are okay. All right, I'm leaving it like this. And then I also said this is the golden pocket, right? It looks like it really didn't move after I just did all that. I mean, the 79 moved up, but literally didn't look like it moved the 61 all that much. But I'm saying, this is where I think it's going to come down into one because of this big area that it left behind to where there is no retracement whatsoever. And like I always said before, remember Tesla, whenever Tesla had that move where it just kind of took off and never came back. Yeah, that's what I'm seeing here in that kind of area. It's going to come back to that area at some point. So, let me see here 1 second. Oh, hold on. What I was thinking is that after it got down into the golden pocket, it would probably start buying again. And then we would see it come up to the weekly fair value gap and then get rejected hard from there. Um, and it would come down, I'm sure one of these, probably the most recent one, right, that I have laid out here, and I probably can't see it very well, but it would be, I'm on the 1 hour. I'm sure once we got in closer, we would find a 15-minute, um, uh, I'm not for sure if it would be, let me see here, low, high, lower, low, probably be a breaker, um, that would be made, right? So at once the price comes up to this area, if more than likely, I think it's going to drive through it. It's probably going to hang around here below it a little bit to try to make people think it's going to go back down. But then I think it's going to drive through it. I think it's going to drive through it pretty hard. And then hit the weekly fair value gap and then drop. And then, of course, come back up to that area, to here. I think here is where I thought the high might have been. It might change to something like this now. So it'll trap buyers in a specific area, such like this. And then once it drops down below it, your only chance, if you're a buyer up here, your only thing to do is that wait until it returns until the last mitigation block or breaker block, one of the two. That's the only way you're going to be able to get out of it, or at least get out of a lot of not take as much a loss as you have already taken. If you hold on to it any longer than that, I don't think um, I don't think it's going to go higher after it comes up and gets rejected. I think it's going to fall after that. Um, and I do think we will see it come down. And I don't know. I have something in me is telling me, hey, there's equal lows here. There's a lot of liquidity resting right here at these equal lows. Market orders, a lot of people are putting, whenever something like this happens, smart money, people that have a lot of money put market orders in as soon as it happens. As soon as it happens, they'll put market orders in. And they'll put buy limits, and they'll put buy limits just below it. And then they won't have a stop loss, because it'll probably spike through it really quick. And then after that, once it spikes through it and they catch it, then they'll be able to put the stop loss. So that's what I do. That's how I catch falling knives. And I taught about that in one of my videos. I think it was the synthetics video. If you wanted to watch that one, I kind of teach you how to do that, because I show you, which candles are most likely to be the one that it's going to trade to once you have something like an equal low like this. And if you have something like an equal low like this, it's going to trade to a bearish order block, which would be this red candle. So as you can see, it came down to it first already, right? But it only got to the top of it. It can come down to the bottom of it. Now, also what it can do is it can also look at this red candle here as well. Now, and that's what I'm thinking it's probably going to do. It's probably actually going to reach all the way back down into this red candle. Not 100%. I don't think. I look at the imbalance. I want to say it wants to get inside that imbalance, but considering previously, it looks like, with all this action that was happening prior to, I just moved that. I don't know how. All this action that was happening prior to, It may not have to come back down and make that part or make that balance back out, but it might. If we were to put a full Fibonacci, I think it was at the time, from here up until that last high I had, your discount array would have been right here, and your premium array would have been right here. So, meaning that this would have been below the 62% level. So, let's try the new one, um, the new level, I guess I should say, if I can get it past all that writing. No, it's backwards. Why is it backwards? Okay, so we'll just flip it, I guess. Oh, it's gonna be the last low. But right here, you can see there's sellers trapped down here, or there were sellers trapped if they didn't get out, because there was the low side of liquidity that got broken. So those are things you got to look out for. You know, if there's a low side of liquidity like that, and you're inside of a monthly fair value gap, you know, watch for it to at least get to the bottom of it. And because I bought here, right? I bought here, and like I said, I took it out in about 90% of uh, my trade up around this area. And I've also went short. So let me see if it's actually got to. Yeah, it looks like it did get to it. I think for some reason it's reversed. I don't know why. Okay, so here is your 61.8 if we do it here, which actually moves the discount rate down for some reason. It's odd. I don't know why it would move it down if it actually spread it out. All right, and now let's flip it around. And then so your premium array is going to be also moved down a little bit to the 61.8. So with the full wave from the bottom all the way to the current top, right? Let me. Oh, there's background. I need it reversed. All right. And look at that. That imbalance, not imbalance, but that 61.8% comes in at exactly, almost exactly at closing in that fair value gap. That's another, congruency that I find interesting. Why would it why would an algorithm, if you know anything about smart money, again, this is an algorithm. This isn't, supply and demand. This isn't, trend lines or triangles or crabs or sharks or whatever you guys think that this is. This is an algorithm. It creates an algorithm. It knows its levels. And I'm just thinking, why would it create, what, how could it create something like that and be so almost on the T if it is not an algorithm, right? How can it create something that would be pretty much a fair value gap, and the 61.8%, if it was to come all the way back down, right, and get into the premium level, which would be the buying level of smart money, basically. They want to buy anywhere between 61.8 and the bottom. Why? Because if you want a pair of jeans, do you want it at 20% off or do you want it at 88% off? Well, you want it at 88% off now, don't you? So, therefore, it could come all the way back down, to one of these areas. Um, and seeing this discount array right at a 1 hour fair value gap imbalance, or if fair value gap enclosure, kind of has me a little bit wondering. Um, if not, if it's not going to come all the way back down to here, look at the 50%. The 50% is almost exactly where the equal lows are. So, and 50% is almost always a drawback. If something does not draw back, 50% is a healthy drawback almost every time. Anytime a candle is made, especially a Maribozu or something like that, if it doesn't draw back 50%, then if it draws back only 15-20% and then takes off again, expect at a later date that that it's going to return to that candle at some point. So this is just kind of how the algorithm works, right? And I'm just trying to teach people this is what the algorithm does. So don't be afraid of it, and the sky is not going to fall tomorrow. But learn it. That way you don't freak out whenever things starts falling and you want to sell, especially if you're investing in Bitcoin and not just trading. I trade. I trade in. I invest. I trade futures for Tether against Bitcoin, and I also trade Bitcoin, as well. So, I'll trade both at the same time because I feel like I'll know where the chart is going. So then I'll trade against, of course, the Tether side of it. I'll make Tether as either it's going up or down. As I'm trading Bitcoin at the same time, I'm playing the game. I'm playing them both the same. That way, I can make Bitcoin and Tether at the same time. It's just really, to me, it's a smart move. Same thing with Ethereum. If I'm gonna do that, if I'm gonna play Ethereum, I'm gonna trade Tether too. It's what KuCoin allows. So that's what I like doing. If I'm gonna trade XRP, I do the same thing. If I'm gonna play DOT, I'm gonna do the same thing. So, and that's why I like to talk about those primarily because that's what I trade. And with Bitcoin having and losing dominance, not unfortunately, but with losing dominance to Ethereum, I think Ethereum is actually one that we need to watch out for, more than anything. So, maybe we should check out maybe an Ethereum chart, maybe. Well, I think I may have one pulled up already instead. Let me double check. Arrow. Okay, so here we go. And this is what I was kind of expecting out of Ethereum. I'm still debating if it is going to see we're on the hourly chart. If it is going to come up, it did come down. It hit the exactly the 61%. Everybody would probably be buying right here. and thinking that it's going to go up. It also came right down through this. This would be your breaker block. So I have a feeling once it gets back up to here, it's going to drop. Not drop, but it is going to drop lower. I think it's going to drop into this area here. I don't think it'll get extremely low, but I think it's going to try to make. I think it's going to try to scare people on purpose. That's for sure. Um, so let me actually just get a little bit of a thicker line there so you can see it. I mean, if you're wondering what these are, I don't know if I labeled them over here or not. I don't think I did. But I'm pretty sure they're both 4 hour 4 hour fair value gaps. Yes. So let me go ahead and label that way I don't forget. All right. So what Ethereum did, smashed through that 4 hour fair value gap. That's for sure. And then use that as basically its support. As you can see, it came down to the very bottom of it, back up, and then entered into the fair value gap, the other 4 hour fair value gap. Didn't get halfway through, and then got rejected. Okay, perfect. I mean, yeah, that's about what I was expecting it for it to happen. Um, and so now, see it come down. And again, like I said, I'm expecting it to come. I don't need 2 hours. Let's get down to the 15-minute of it and see what's going on. Okay. So even after it went back through the 4 hour fair value gap, it came back up to it. I mean, it's still respecting its levels. And this algorithm remembers everything. So you can see it wick up into it. It doesn't want to go into it, and then but once it does, it drives up into it to the top, right? Bounces out and then drives back out. Right. So and same thing kind of here. I mean, drives up into it, drives out. You can see it whenever it comes up to it, gets close to it, doesn't want to get into it, but then drives up in. What? Then once it kind of gets, I mean, these things act like magnets. Like if you put two magnets together and then you also flip them around, to try to, you know how they don't want to stick together and they want to propel apart all the time. Exactly how they act. So sometimes they'll pull up right into it, and then as soon as they do, they'll propel right out. And then once they try to propel right out, they'll try to stay in. And it's just interesting to watch how they react against fair value gaps. This did not work out very well, did it? I don't know what happened here. I thought I fixed that. But considering this lower 4 hour fair value gap has been entered into and cleared out 1, 2, 3, for 5 times, we shouldn't have any more issue. I mean, it'll still remember this fair value gap, but we shouldn't have any problems with it as far as it not wanting to go up into it and go through it. It's going to be this one that we're going to have to watch. And I think we're going to be fine now that it's already been up into it. I think the problem is, what I think is going to happen is it's going to uh, probably get up close to it, get to the top, pull back down a little bit, and then just shoot straight up through it. Again, because it wants to, it'll probably come up, take the liquidity, pull back down, and then shoot straight up. Just like we always see what it does with equal highs and liquidity. It'll go through it, pull back, and then go back the other way. Just like we saw with the whole Bitcoin spike that I was telling you about with the liquidity area that I was thinking it was going to pass, and it did pass. And so we'll just have to see what's going to happen here with Ethereum. Because I don't want to mess with Ethereum just yet. I had been paying more attention to Bitcoin than I had been Ethereum. I had been scalping Ethereum along the way. Just watching the levels and probably knowing what it was gonna do when it was gonna do it. So I would put in longs here and there. I don't like shorting the market, especially when I still think it's in a bull market. I don't want to short it. So I only want to long something. So if it does have a pullback like this, I don't want to short it just to try to make a quick buck or two. I would rather wait until I find a safe space that I can actually feel comfortable longing, and then long that instead of actually shorting it, So right now, I would feel comfortable shorting Bitcoin, um, just only for a short amount of time. Only until it reaches about, I want to say 42.50 or something like that. That was not supposed to move. All right, there we go. And actually, let me look at this from a 4-hour perspective instead. I would rather do that. That make me feel a little bit more comfortable. Yeah, sticking that right there does not make me feel comfortable. I'd rather stick it there. Okay. Because you have it come up, come back down, and then come back up. So now do want to move this back down a little bit. There we go, golden pocket. So as you can see, it did drop down below. It looks like it took out some level of liquidity. I'm not for sure. What is this yellow line? Oh, okay. That's when I was measuring it as it was going up to see if it was going. I was measuring all these lines. I was making. This line does not need to be here, so I'm going to take this out. So as you can see, I measured this one too, seeing when it was going to cross this one. It still has not crossed this one. This is interesting. See, this is why. And I think this is why I drew. Yes, this is exactly why I drew what I drew earlier, I think, maybe. This coming back up to this area. And maybe falling back to here. think it'll come up here, touch this. And the other thing I don't like about this is that there's no confluence in between the extension amounts and the start of the weekly fair value gap. It's the only thing I don't feel comfortable about right now. Well, actually, you know what? It's probably because I don't have the right one on it. I don't know. This is the one from the very bottom. Okay, that's why. This is the one that we have right now. There we go. Now I feel a lot more comfortable. Okay. When these things get moved, I need to lock that. Remind me, I need to lock that right now. Okay, so now that it is pretty much at the same exact level, I do feel a lot better with that congruency or confluency. So now I'm just waiting to see what is going to happen with Bitcoin. We've already talked about it. I still think it's going to get a little bit lower, as I do with Ethereum as well. If we want to talk about something else like XMR, it looks like it was already on its way down. Found the fair value gap. Through that, I scalp XMR every now and then. And it looks like it could be healthy to start being bullish again. Looks like it came down. And this whole area here. Right, so it doesn't want to be consolidating in that same area. So what does it do? It comes down into it, probably hits a bullish order block. I'm going to assume this guy right here is exactly what it looks like, actually. Yep. So that would be the or actually it would be this guy, because you'd want your last beefiest down candle, as my mentor would say, your last beefiest down candle before your up candles, right? So which that could also be this one too. This one just has a little bit more of a wick on it, so that's why I don't like that. I like the beefiness of this with no wick. So if we move back over to this way, that's probably why it did come down into this area, return back out, come back down, and now come back up. And it looks like it has closed in the fair value gap. And so I would expect it to now is to come back down and then close this fair value gap, which would also be the bullish order block. And then buy from there. So I think with XMR, I think we're safe to buy whenever it gets back down to that level. 1 second. A little bit of a technical issue. So what is that? Let's just take a look at what, well, I don't know what that is, but all right, 256.13. So I think we would be okay to buy after that. This, I had no idea why I drew a huge box like this. I mean, this would be some kind of very, very huge breaker of some sort, I think. I don't know. No, not at all. I have no idea why I drew this. where this came from. I'm just going to delete it. Because all it was just it going down into this fair value gap. Because as you can see, the fair value gap was wide open. So that was where liquidity was left or voided, whichever one you want to say. More of a liquidity void. Comes down into it and then pulls out that liquidity, hits the bullish order block, I should say, and then jumps back out. Yeah, and XMR is interesting. XMR is interesting, especially with the highest prices it has. It has a very, very, very low dominance in the crypto space. I want to say as far as the larger coins, it has probably one of the lowest. So and to find that out, I think I showed you this last night. Again, I'm still watching audio, just because it is an amazing coin. And I was thinking about jumping out of my my grid trading that we talked about last night. But then I saw it come back down on a 4-hour chart. It looks a lot better. See, so you have this red candle here. So that right there would be your bullish order block. And I was about to jump out of it if it got any lower, and it didn't. So I was like, all right, I'm good. I mean, I was going to keep the coins, of course. So I was just going to jump out of the grid trading itself, the robot trading, and let it, go down on its own. That way the robot wasn't trying to, buy and sell at like weird spots or something, because those grid trading robots pretty much only work in a trending environment. So if it's trending downwards, it's not going to work. If it's trending upwards, I think it will. So as you can see, it's doing just fine. But anyways, what I was going to say is XMR.D, and that'll give us the market cap for Monero. You can see it's only 0.27% of all crypto. A very, very small market cap. Very, 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 very small. As compared to Ethereum. Let's see, D, which is growing to it. It did an all-time high yesterday almost. So it's 20%. It's 20% of all crypto is Ethereum, or being owned by people out there is Ethereum, which is quite an astonishing feat, as just to where it has come from. The most interesting one, of course, is going to be Bitcoin, because it is going down. It used to be the dominant one, forever, especially hovering 60-70% almost at all times. Now it's in the 40s. So all these other coins are coming into the space, taking away from Bitcoin, and Ethereum adding to it. It's not taking away from Ethereum. Ethereum is being added to. So I don't know if it's a mixture of both, that people are going for a couple different altcoins. I mean, you can check a lot of different ones if you wanted to. I don't know if I went over this. I don't think I did go over this last night or not, but if you wanted to check out Solana, I mean, it's 0.6. If you wanted to check out Litecoin, yeah, I think it's 0.6 as well, 0.57. So all these ones are. I think the next biggest one is BNB. Yeah, so that's 3.29. I don't even think XRP has as much dominance as BNB does. Uh, no, it doesn't. So, as you can see, that's if you want to take a uh, coin market cap, um, these are the top 10 coins. So, uh, yeah, top five even, that I just threw out there. So you can definitely see where the money is going as far as market dominance is concerned. Uniswap, is 0.88. Trying to think of something else that would. I think I did XMR already. Oh yeah, we could do XML. I know Stellar Lumens. No. Yeah, I guess Stellar Lumens does not have its place in the market share. XML. Is it XML? USD. Hello. Oh, XLM. Hello. So it is. Well, it's even lower. It's at 0.38. No wonder I never really cared too much about it. Um, let's see if GRT has any dominance. Not DRT. Oops. Yeah. Okay. 0.1. Yeah. I guess not too many people are fans of the graph. Um, this is weird. It jumps from 0.5 to 0.11 or even higher than that on June 18th. That is odd. That is really odd. If anybody can explain that to me, I would love to know. Um, but all right, now that we've got done talking about all that good stuff, what I want to do now, is let's also talk about gold. Gold is a good thing to trade as well, especially I know some of you people. I don't know if you guys, whatever you're trading your crypto on, if you're spot trading, if you're futures trading, if you're, just, margin trading, or margin trading with leverage. I trade with leverage, but I do not try to use margin. Well, I mean, anytime you use leverage, you have margin. But I mean, I don't try to borrow, I guess I should say. I don't want to borrow other people's money to trade. I will make sure I keep that all my own money. So I'm not for sure what you're using. I know that if you're using MetaTrader 4, the only crypto that you pretty much can trade is Bitcoin, primarily because of not financial, but regulation reasonings. Almost all other crypto are kind of banned. I would say, or I would say it's kind of illegal to trade it. There's um, no no broker that I know of that carries it except for Hugo's Way. And Hugo's Way is not certified in the U.S. They're not certified at all. So if you have a Hugo, and I have a Hugo's Way account, I'm not gonna lie. If you do have a Hugo's Way account, just be careful. Don't keep too much in it. If you make a lot of money, pull it out as soon as you can, because they could go under at any minute and take your money with them, and you may never see it again. So that's that. So I always say try to use um, definitely try to use a broker that is licensed with all the financial you know, institutions around the world, not just the United States. Because if you get one that's just the United States, more than likely they're not going to offer uh, um, any kind of forex or commodities trading, and gold would be considered a commodity, and that would be considered illegal. So if you had one, that covered, Australia and Great Britain's, but as well as Americas and stuff like that. From my understanding, you can trade gold. So what we're going to do now is, here, let's just go ahead and use this one here. Um, I wonder if you could do an XAU dot D. No, I was going to say, I didn't know if there was some kind of dominance for that kind of thing or not, but what is this? XAU USD SPT. What is SPT? I don't know, but it's not showing up, so I guess it's not really going to matter. All right, so we'll take a look at it on, let's go for, I usually look at forex.com for most of my stuff. We'll go ahead and look at it right now, considering it is open and trading. Oh my God, did it just fall like that just now? And we missed it? Oh, it felt like that. Yeah, it looks like it did fall like that within the last couple hours, and we missed it. Man, I miss all the good stuff trading Bitcoin all the time. That's crazy. Okay, so I had a feeling it was probably going to get lower. Just I have been waiting for it to get lower than this, and the one time it actually does it, I miss it. Yeah. All because I was looking at or trying to prove people that, hey, there is a, from now on I don't have to prove anything to anybody. There is an algorithm out there, all right, and in Bitcoin and in gold and in the dollar and everything else. There is an algorithm that is controlling these markets. Or else the people, especially once they get institutionalized, I should say, once they're institutionalized, yes, they are definitely an algorithm in them. Why? Because that is an asset, that is somebody's asset that they need to continue going. And if they have a lot of money, they're going to make sure that that asset um, continues to have high value, right? The only problem with gold is that really nobody owns gold, except for whoever actually owns gold bars, but I'm not for sure who that is. But there is an algorithm in these markets, and it's the same as everything else. I just didn't expect it to drop like that in such a quick time. All right, so, um, well, I was gonna try to do something a little bit more technical with this, but since it just dropped and grabbed liquidity, and is coming back up. Let's see where that low was, and let's draw a line across. I'm going to get rid of this because this makes no sense right now. It could come up. It just depends. Where's it at right now? Let's see here. Okay, so it has come up to this area right here. I have a feeling it's probably going to be coming up to this. As you would see your last down candle. Beefy down candle. So that would be this guy right here. And if anything, we probably actually may want to get into the 15-minute of this. Well, we can find the actual 15-minute beefy down candle. And it looks like the winner would be this guy right here. It's not long, but it's beefy. I mean, it doesn't have, beefy by meaning it doesn't have wicks. It doesn't have huge wicks on it. All right, we can roll it up here. And there you go. That right there, I think, is going to more than likely be your bearish breaker. It was bullish breaker until it got traded straight through, and then it became bearish. So once it got traded straight through, now that's on the opposite side, it's gonna have, it could have a rough time getting up and above that. So I mean, right now, gold is going to also have its challenges. As you can see, there's already fair value gaps created. One right here. It looks like it just entered the fair value gap. Let's get a little bit closer look and find out. That must have mean the dollar must have risen really fast. So yes, if we throw in a fair value gap right here, all right, so let's do that. It does come in and just touch it barely, and looks like it's trying to be bullish. We have somewhat equal highs establishing. So in case it does come back down, it is going to want to break those equal highs. Let me see on a 5-minute chart what's going on here. We have the bearish order block that is not wanting to let it pass. So this is our guy. Or you can do a line, or what people do. I mean, it's the same thing like we did earlier. I'll just change the colors of it so we don't get it confused with. Let's go with that color, and let's go with this color. That we're really not confused. And well, can't really type like that. So as you can see in the 5-minute chart, it is definitely respecting that 5-minute order block. It's reaching up into it, it's coming back out, reaching, but it looks like it's gonna fight through it. Maybe taking it a little bit, but it looks like it is definitely wanting to fight through it. That being said, I might just place a trade. Interestingly enough, the commodities have fallen. So there, I do think this will, and it looks like it got to the 5-minute fair value gap here, and it looks like that's what may have spooked it from going any higher. Look at that, right? It's right on top of each other. So fair value gap. So even though this might be wanting to get up and to the top and try to get above this bearish order block, which I'm sure I will, it could also get to the top and then drop, because what you also have is a lot of equal lows sitting right down here at this 15-minute fair value gap. Even though you do at the 5-minute, you do have this 5-minute candle that does come back in, come back out. It doesn't matter. You know, a lot larger the time frames usually override those things. You could see this come down and enter the 15-minute fair value gap, as well as take out the you know, the sell side liquidity of these candles here, and sell side liquidity. I might as well just go ahead and throw it on the end here. Right, coordinates. Pretty much the same. Just gotta move this up. All right. There we go. So, looks like gold could have an interesting day. I think it's all gonna depend on what the dollar is gonna do. And the dollar is interesting because does have a liquidity void that it is trying to pass, if I am not mistaken. So if we go to the dollar, yes, it looks like if we're on the 15-minute, it didn't spike up. Yeah, I guess it kind of did. And that's the thing, is that with the dollar and the gold relationship, sometimes when the dollar barely moves, gold will just, it'll fly one way. Like it'll go up, like the dollar will go up just a little bit, and then gold will just drop really bad. And then sometimes, you know, gold will, or you know, it'll move along about the same opposite ends, and then sometimes, you know, the dollar will drop a little bit, and then the gold will just skyrocket. It's just really weird. Um, so it has made a V shape here. It looks like it has made an area to where, so you have a high, a low, a higher high. So you do have a little breaker here, a 15-minute breaker in the dollar chart. So it looks like if it does want to go up here, which would drive gold the opposite way, so gold drive gold down, which is what I think it's going to do. And then gold's going to get below those levels and then pop back up like I was talking about. So here's gold. gold eventually drive below those levels, pop back up. Just like what I think, this could probably end up going up into this breaker and then dropping back down, because look at this liquidity right here. Look at these equal lows. That's just begging the dollar for it to drop. Now, and I was talking about dollar having, I don't know if it's going to show it in here or not. Maybe it'll show it in the 4 hour. Oh, it's way back here, that's why. The volume imbalance. Okay, it's not showing it in the 4 hour. Sometimes these brokers are weird. See, right here you go. This is what I was talking about. How did it get moved? I guess I moved it. Because from body to body, come on now. Body to body, you have this big imbalance right here that the dollar got up into. And that's what we were waiting to see, at the beginning of this week. And I wasn't paying attention to the dollar as soon as it opened. Looks interesting because it's like almost like a cutout, because they all come back up. It drops down, comes back up, drops down, comes back up, and then of course this one drops way down and then comes back up. And so what we were looking to do possibly I think fill in this area up here. I think that was a fair value gap up here that we were thinking it could possibly try to reach for. So we're not for sure if the dollar is going to be bullish or bearish this week, considering it was blah almost all last week. As you can see, from August 1st until FOMC day, or non-farm payroll day, sorry. And then non-farm payroll day, it did a seek and destroy. So seek and destroy meaning it took out liquidity on both sides in the market. So it took out liquidity down here and then took out liquidity up above, and then decided to come back down and looks like use this as its bullish order block. These 2 red candles, 3 red candles going down. Use the top of that red candle, right? And then pull that over. There you go. There's your bullish order block. Falls down into that bullish order block and then continues on up. So it could be looking bullish this week, which means gold could be looking bearish. So if we look back at gold, as you can see, it's already moving up into the top of this bearish order block. It could get to the top again. Could get halfway through this 5-minute fair value gap and then drop. Or it may not even get to it. Could get to the top of this bearish order block and then drop. and then take out the sell side liquidity, and then take out the 5-minute fair value gap, and then try to fight its way back up again. Let me do a fib retracement on top of this guy here and this guy here. And what I want to do is draw a line right down the middle. Because I want to see what kind of reaction it has whenever it does get to the middle. And that is at 1747.78. So we're close. And middle. Okay, so these are the areas you want to watch out for this week, especially with maybe even tomorrow, maybe tonight, and maybe even overnight. I don't know, but we're gonna have to see what's gonna happen with that level, with gold, if we want to see what's, if it's gonna get back up and over this hump, which it does have, fairly equal highs. Once it does have fairly equal highs, it generally does want to get back above them. But it looks like it could have a struggle along the way to get there. So, anyways, that's it for me. I've been way too long. An hour and 16 minutes is way too long. So I'm going to get off here. Thank you all for listening to me ramble and rant. Hopefully you learned something. If you did learn something, I'd like you to do me something special and hit that subscribe button, hit that like button. Hopefully Smart Money taught you something. Hopefully you didn't have to use it, learn something that you from a trend line, or you had to learn something about a harmonic or anything like that. You just had to learn something about price levels, right? Price levels are the key. It's not these fake fairy tale things that they tell you about. There's no magic indicator. There's nothing that all these retail theory people think that are out there that's going to help you with these charts. It's going to be these key price levels and the bias that the price has on it. So pick a bias. Like I said, you look at the dollar, we're looking at it could be bullish. All right, if it's going to be bullish, and if you want to trade forex or something like that, euro could be coming down, right? GBP USD could be coming down. Those are the main two I would look at. And then also gold could be coming down too. So those are the things. Also, if the dollar is going up, Bitcoin could be going down. They usually have an inverse reaction or inverse relationship as well, because people that are taking their money out of Bitcoin are generally putting it in their bank, and it's strengthening the dollar. So flip one for the other. Or people that are taking their money from their bank and they're putting it to Bitcoin, makes the dollar weaker, and then makes Bitcoin stronger. So that's why they usually have an inverse reaction. Generally has nothing to do with whales or anything like that. It just has to do with, well, for one, the algorithm. And the algorithm is controlled primarily by 10% of traders that take all of the money, that take most of the money. I mean, trading's a 50-50 game. If you think about trading, and not just spot trading, like investing or anything like that, but actual trading, if you're trading futures or things like that, if you put up some of your money, there's going to be a position that's going to be almost exactly the opposite of your end. And so if you lose money, somebody else is gaining that money, right? So 50% of the people are losing money, 50%, well, I should say not of the people, 50% of money is lost, 50% of money is gained by another party. And it's generally 90% of it is lost by retail traders, 10% of it is won by smart money traders. That's why I preach smart money. That's why I say listen to smart money, because that's what the banks go off of. The bankers are doing the same thing that I am trying to teach you, because I am taught by a smart money banker. There it is. All right. So, that being said, I will let you all have a good night. Have a good night's rest and get some sleep, because we got a long week this week. And actually, it'll probably be pretty boring, because August is a very boring trading month when it comes to Forex. Maybe not so much equities this week. We'll have to see. The SPX I can already tell fell a little bit, which means probably the Dow and the Nasdaq did too. And you got to watch, especially the Nasdaq, because the Nasdaq also has equities that are tied to crypto, like Marathon Patent Group, Canon, the company that builds the computers that mines the crypto, like Riot Blockchain. All of those that are equities that are in the equities market are in Nasdaq, that are tied to crypto. So also you have OBTC, which is OSPI Bitcoin Trust. So you have an ETF that's trying to create a retirement fund or whatever it is, for Bitcoin. Right now, it's actually it's at one of its lowest it's ever been. So if you ever want to jump into a Bitcoin Trust, before they put in, who knows, if you jump into it now and your company offers some kind of Bitcoin Trust retirement fund and you're already in it, they could roll it into your Bitcoin, they could roll it into your retirement account and be safe with it there with your work, instead of having to worry about it on your own. So anyways, enough from me ranting and raving and talking. I'm getting off of here. Thank you all for watching. And Ted out. Wear your pants. Just wear your pants.